Welcome back to another episode. Today we're going to take a quick look at 4 stocks that I don't mind dollar cost averaging into this week with my weekly purchases. But before we go there, I just want to share my overall thoughts in the overall market. I mean, it's been a horrible year. It's only the first 24 days of January, but year to date we can see the Qs are down about 14.7%. So techs are taking a huge hit. We can also see huge growth names are down. ARC Innovation, for example, one that has numerous growth stocks in their ETF, is down about 30% year to date. If we take a quick look in the past year, it has provided negative 53%. And one thing that I find interesting is ARC compared to its peak pre-COVID is only up 16.08% right now. And that's actually pretty interesting. Some people might say, hey, this is now, it seems to be an overselling in stocks right now, because a lot of those companies within ARC's ETFs are a lot stronger than 15% compared to where they were pre-COVID. So something to keep note. Obviously, stock prices can continue to go down. And I want to say, right, I'm hurting, but to me, I continue with my plan, dollar cost averaging. I'm a young investor, been investing for a little bit over 7, maybe 8 years now, and I go with my weekly portfolio, weekly addition, and every week I continue to add. Sometimes I buy high, sometimes I buy low, but that dollar cost average mentality helps me keep in check. But I know there's probably a lot of new investors right now just starting the market and probably taking a huge hit where portfolios down big. Let me just say, this is the volatility in the market. As long as you're focusing in strong companies, as long as you're focusing also maybe some in ETFs as well, you're focusing some on index, in the long term, this can just look like a blip. So remember, the best thing is to get emotions out of the game. And by getting emotions out of the game, it doesn't mean don't feel anything, right? Obviously, it sucks that stocks are down, but don't act on those emotions. That's what's important, because once we get emotional, that's when we start to do irrational stuff with our portfolio. So the first thing is to kind of remove emotions. Try to find your magic number. And that magic number, you're only able to find it during from experience, I believe. I don't think anyone can find that magic number for you. Luckily, I have that magic number. So even though it sucks to see my portfolio down like this, in the long term of things, I'm not worried. I'm continuing my plan of weekly investing in companies I enjoy. So sorry for that rant, but I just wanted to share my overall thoughts and what I'm doing. And hopefully I can kind of help someone else in the term that, hey, might be kind of doing some irrational thinking right now. All right, so the 4 companies I want to take a quick look at are Meta Platforms, Roblox, CRNC, and Alphabet. And right now, with the overall market, I normally seek the following: something with a strong balance sheet, something with strong positive cash flow from operations, and something that has great revenue growth potential. And the 4 stocks here, I believe, meet all those criteria. Let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. First thing we can see is some of these stocks have taken a huge hit. CRNC is down over 56, almost over 55% from all-time highs. Then we have Roblox down over 52%. Now we take a quick look at Meta Platforms, down over 22%, and then we have Alphabet down over 15% from all-time highs. But if we take a quick look at these companies' fundamentals, first, Meta Platforms, high cash flow from operations, and also has high cash and short-term investments with no long-term debt. If we take a look at Roblox, very similar. High cash flow from operations, high cash and short-term investments, low debt. The only one that might look a little iffy might be CRNC. CRNC has a little bit more debt than cash and short-term investments and cash from operations, but those other 2 are still positive, so it kind of helps me overlook. I also do enjoy CRNC and the market it's in. Finally, we do have Alphabet, and Alphabet comes in here with high cash flow from operations, has high cash and short-term investments, and very, very low debt. So all these companies looking well for me. So now let's go with their future growth. For me, Facebook, Meta platforms, their huge growth is the family daily active people, right? This is a social platform that continues to grow. We can see every quarter has continuously seen a growth in family daily active people. The more people in their platform, the more money they're advertised, the more power to some extent that they have. They're focusing into this metaverse, and I am very bullish in the way they're going, but at the same time, I understand this is still very early. In my mind, I do believe this metaverse will be some form of, I want to say, extension to a social platform. So I do believe it's smart for Facebook to go into it. At the moment, their advertising business, I don't believe will take much of a hit. Obviously, during bad times, less companies invest, but the amount of people on their platforms will remain high. So when things go back to normal, we will continue to see high advertising on their platform. Next is another advertising platform. I think advertisement is not going anywhere. When one business fails, another business kind of appears and they need to advertise somewhere. So that's where Google comes in. Google, strong revenues. We can see about 41% compared to same time last year, huge growth. They are also doing well with YouTube ads. YouTube ads is probably one of my favorite platforms. Obviously, I'm here kind of creating content, but all their Google advertisements continue to grow. And like I mentioned, I believe this is a company that will do well with the amount of cash flow that they have, with the amount of cash and balance sheet that they have. And even though now the stock price has taken quite a hit, I do believe it's looking a little bit more attractive. Now, if we take a quick look at Cerence. Cerence is one that many people might not be familiar with. So let me do a quick explanation. Cerence creates technology that is used for the artificial intelligence of voice and vision in your vehicle. Right now, in the trailing 12 months, 54% of global auto productions come with Cerence technology. So more than 1 out of every 2 cars come with some form of Cerence technology behind it. That's pretty awesome. 78% is repeatable software revenue. So investors know what is that kind of revenue coming in. The other amazing thing is the average contract duration is about 6. So that's a long time, right? Finally, I do want to mention Cerence. On December 23rd, they announced one of their largest contract in company history, and I'm excited to see that in the upcoming earnings. So Cerence definitely makes the list. The final company is Roblox, and this is a gaming company. And I believe right now, parents, even during tough times, they don't mind paying $10, $15 of Robux to kind of keep their kids entertained to some extent. Some other thing, we can see daily active users in their most recent earnings continue to grow even during this COVID slowdown that was supposed to happen with gaming companies. The other thing I do want to mention is now age group of Roblox is over 13. That makes up a majority of the overall daily active users, and I do believe that's great news because over 13, I believe, have a stronger wallet base and would mean, in theory, more money coming in Roblox. So these are the 4 stocks I'm planning on adding this upcoming Friday. I do weekly editions, and these 4 I'm enjoying the growth, their kind of fundamentals, and the overall markets that they're in. Like I said, it is bad, and the market can continue to be bad, but when we invest in the long term of things. So remember that short term really hurts, but in the long term, this could be a great buying opportunities, especially for these strong companies or indexes, whichever you decide to go. So take care, have a good day, and see you next time.